RBI has just asked banks to review contracts with fintechs as to know who will do the underwriting process and bear the ultimate credit risks. But how do you think this will affect current and future partnerships, and who exactly do you think should bear the ultimate risk? Should it be the fintech or should it be the bank?
So fintech anyways is an enabler. That has been from the beginning. There have been certain fintechs who try their hands uh, with the regulated entities, want to make decision making, carrying the risk. But we have seen that model doesn't work. And RBI has never said that they allow or they wanted to allow fintechs. They have been giving signals for many times. But finally, when the digital lending policy came in, it made it very evident that there are specific reasons why a regulated entity should do the risk underwriting and enabling KYC process, customer information, everything as privacy, data privacy, all those factors keeping in mind. The future is very clear, which was earlier also, that fintechs will be the enablers, not the doing the risk underwriting or providing credit. They will be the enablers.
All right. All right. Just adding to that, the RBI had also cited the digital lending guidelines, saying that from a customer standpoint, data transparency has improved, but at the same time, there is a lot of the gray area that is related to the loan underwriting process. Would you care to comment on the what exactly is the gray area here?
RBI has asked to make it transparent, right? There has been a lot of controversies on the Chinese apps and some apps charging high rate of interest, which was not disclosed to the customer. So they made it mandatory that it has to be clear cut disclosed in a KFS statement, which mentions the APR, the total outflow customer is putting out, and all those details. So I think it is fair to demand that, and I think almost all of the regulated entities are following that, and we don't see much or any impact of that. It should be on the positive side.
Right.
The gray area, I think it doesn't remain any gray because it is black and white. That the underwriting will be done by the regulated entities, not by the fintechs, and the risk will be with the regulated entities, not with by the fintechs. So when you are doing underwriting by a regulated entity, it has to be done basis certain documentation, right? So those documents, fintech is an enabler to provide that. Like you have a lot of today, I don't need to walk into a bank or access my bank statement, then upload and do that. If I'm taking a loan from an NBFC or other bank where I don't have an account aggregator facility, right, allows us simple access to be given where you can draw. So those kind of enablers are provided by fintechs. Banks are using that and underwriting that.